Does take us to our talk of the tape, whether stocks are cleared for takeoff, as Jeremy Siegel suggested to us right here yesterday. Let's ask Liz Young, SoFi's head of investment strategy. She is here with me today at Post 9. Welcome back.
Thank you.
How about that? Are we cleared for takeoff? Is this all clear as some of the bulls are now suggesting?
No, I don't think it's all clear. I don't think it's a surprise to anybody that I'm saying I don't think it's all clear. I do think that there's been a tone shift this week. I think we're going to look back on this week and realize that it was very pivotal. I would say the same thing if I were here, by the way, on a day that we were rallying. We went from anticipating the end of hikes to now anticipating the beginning of cuts.
Pricing them in too, right? March and May and
exactly.
ticking higher.
Not only that, but pulled cuts forward. It used to be that the first cut was going to be in July. Now we've got two cuts priced in July. The first cut is in May. The reaction to this cooler data, although rational, I think it's rational that we had a rally, we had some relief, we had a period where stocks were really pressured, not only by rising yields, but by a resurgence in inflation. So it's only rational that the opposite would drive a rally. But the size of the reaction, particularly in yields, a two-year yield that had an intraday move of 24 basis points, that's huge. That's in the 98th percentile of one-day moves for the two-year. That type of reaction, that size of reaction, is a different tone. And if we continue to have this big of reactions on just marginally cooler data, I think that's where people are going to start to get worried that we can't stop it from falling too fast.
Well, it's marginally cooler. You're referring to probably CPI and PPI. I mean, marginally cool, but trending in the right direction.
Absolutely.
Undoubtedly. And that's what matters more. We're not expecting some massive drop month over month or year over year at this point in those reads, but where we're going might be good enough to say, you know what, I think we could actually have this soft landing that some have been betting on. And then if that is the case, why not buy stocks finally?
Yeah, I mean, it's still a possibility, right? I'm not completely counting that out. It's still a possibility that we get things down to a more manageable level in inflation. The labor market cools, but it's palatable. That's still possible.
Isn't that what's happening, though?
Yes.
Not possible, but that is what's happening.
That is the current state of affairs, yes.
Right.
The concern is that that's always how it starts. And then it usually picks up steam. It's like a snowball rolling down a hill, right? It usually picks up steam as we go. So there's this concern that can we stop it before it becomes really a big problem? That's what I'm watching this week in these big moves. I think that not just the marginal cooling, yes, that's a positive thing, but the fact that we missed expectations. So now we're not even sure that the expectations about inflation are going to be correct. And it starts to bubble up this fear that, is it too much, right? Did it go down too far, too fast? And now are we looking at a situation where there's demand destruction? None of that's been confirmed, and it won't be confirmed for a while yet. So the market is in this purgatory state. And typically the market actually does hold up pretty well after the last hike and before the first cut. But as you near that first cut is when things get a lot more choppy.